The price has moved up. It's been an anticipatory move, I think. Many people have been saying there's going to be a sell on the news. This is up too far, too fast. And that very well could be, but I don't think it's going to last very long because this is the SEC's green light. And there have been institutions waiting on the sidelines. They were not going to move until the SEC blessed this. And we've had a lot of our clients and the gatekeepers were not going to allow Bitcoin, even what we did own, GBTC.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discuss about Bitcoin and other crypto. According to Cathie Wood, there has been a great deal of anticipation, and as the price has increased, many individuals have probably been saying as much. The news is going to sell down too much too quickly. And although that might be the case, SEC has given its approval, and that there have been institutions waiting for the sidelines. They said they wouldn't move unless the bless this, and Ark Invest had a number of clients who gatekeepers refused to permit Bitcoin, even if Ark Invest did possess it. They would not provide entry on their own portfolios before the SEC approved it. So Cathie believed that this is a significant occasion, and that the flows will help us prove that this is a legitimate instance of scarcity value. As you have Bitcoin outstanding at about 19.5 of the 19.6 million Bitcoin, 15 million are held by what are known as strong hands. The remaining, they don't have feeble hands, they have powerful hands. It's been around 6 months since they last transferred their Bitcoin, and we can keep an eye on this. Therefore, 15 of the 19.5 will be produced, totaling 21 million units of Bitcoin, and lots of things Cathie would discuss. So please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
The price has moved up. It's been an anticipatory move, I think. Many people have been saying there's going to be a sell on the news. This is up too far, too fast. And that very well could be, but I don't think it's going to last very long because this is the SEC's green light, and there have been institutions waiting on the sidelines. They were not going to move until the SEC blessed this. And we've had a lot of our clients and the gatekeepers were not going to allow Bitcoin, even what we did own, GBTC, they would not allow in portfolios until the SEC blessed it. So I do think this is a big moment, and I do think that the flows are going to help us demonstrate that there's real scarcity value here, because you've got Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin. And 15 million of those are in the hands of what we call strong hands. They're not weak hands, they're strong hands. They haven't moved their Bitcoin in roughly half a year, and we can monitor this. So 15 out of the 19.5, and the number of Bitcoin ever that will be created is 21 million units. So again, I think you're going to start to see scarcity value playing a big role here.
According to Cathie Wood in 2023, one of the most significant Bitcoin proof points occurred. But prior to it, the majority of investors believed it to be an asset risk. They never imagined it would perform well in economies that are prone to crises. And of course, there were many different types of crises. In 2022 did not perform as expected, but what transpired during the regional bank catastrophe in March of last year, the K was collapse of Silicon Valley Bank, Republic and other banks going bankrupt, and an almost 40% increase in Bitcoin. In the midst of all of this, what did that inform us of? It indicates that there is a risk off of the asset in addition to the risk on the asset, and that spoke volumes to us. In fact, Ark Invest converted, and financial institution officials are now referring to it as a flight to quality. State, there's a flight to safety. Why do we state there's no counterparty risk, as opposed to the banking system? The 089 financial catastrophe was brought on by counterparty risk, and the concern of counterparty risk again led to the regional bank crisis. Transparent, decentralized network, since counterparty risk does not exist. We can now state that Bitcoin is more than just a hedge. It is a hedge against deflation because of its scarcity value, but it also protects against inflation because there is no counterparty risk. Let's back to the Cathie Wood interview.
Yeah, I think you are picking on some endpoint sensitivity there. One of the most important proof points for Bitcoin happened in 2023, whereas before most investors thought it was a risk-on asset. It would do well in strong markets. They never thought it would do well in crisis-prone markets. And of course, in 2022, there was all kinds of crisis, and it didn't do well. But what happened during the regional bank meltdown in March of last year? The regional bank index, the KRE, was imploding. Silicon Valley Bank, Signature, Republic, other banks went bankrupt. Bitcoin went up almost, I think it went up 40%, right in the middle. What did that tell us? It tells us we have not only a risk-on asset here, but we also have a risk-off asset. And that spoke volumes to us. In fact, we got converts. Now, leaders of financial institutions call it a flight to quality. We would say a flight to safety. And why do we say that? There's no counterparty risk, unlike in the banking system. The counterparty risk is what caused the 08-09 financial meltdown. Fear of counterparty risk, once again, caused the regional bank crisis. With this fully decentralized, transparent network, there isn't counterparty risk. So we are now saying Bitcoin is not only a hedge against inflation, given its scarcity value, but it is a hedge against deflation, given the lack of counterparty risk.
According to Cathie Wood, when interest rates did eventually begin to rise in 2017, not only did our strategy, the flagship strategy, go up more than 85%, yet in 2017, Cathie Wood believed Bitcoin went insane when interest rates rose, going from $1,000 to $220,000, refuting your interest rate argument. Although it hasn't worked out historically, our equity strategies have undoubtedly experienced a surge in frequency of trading high-frequency trading accounts for up to 75% of trade activity at times. And they managed to obtain access to a few algorithms using their quantitative research and determine that, regardless of rising interest rates or anything else, it's what's going to move the market. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.